Should we start, Julia, Tate? What do you think?
Yeah, I think so.
Okay.
So maybe I can start actually. So hello everyone, and thank you so much for joining us for this last learning session around the result-based finance pilot with two entrepreneur support organizations. As you might imagine, as a knowledge manager, I'm extremely excited to have this session. We actually started this work 2 years ago with iGravity, and it's been honestly a very interesting partnership. And I mean, with iGravity and our two ESOs, but also engaging with many of you along the way. We're keeping this session in this trusted group of people because, yes, we want to share, but honestly, we want to hear your questions. We are happy to be challenged because at the end of the day, we will publish a report. And if we want our very limited experience to inspire some others and add value in the sector, we would want this publication to be really helpful. So please keep that in the back of your mind, and do raise questions and challenges today. I think we can take it. We are the whole team together. And I let maybe Morgan and Camille take us through the session. Thanks everyone again for being there today.
Thanks, Julia, and welcome to everybody. We were thinking, because there are still new names which might not have been part of the early session, so maybe we do a super short intro on our side so that you know who the speakers are and they can introduce their organization, and then we'll go directly in the session. So I can start on the iGravity side. My name is Morgan Loisel, and we have been, as Julia was saying, designing this RBF program. And I'm joined with Camille. Maybe Camille, a few words, and then we hand over to the OST and SHONA.
Yeah, thanks so much. My name is Camille Bukov, also working with Morgan as an associate for iGravity, based in Kenya, where Morgan is in Switzerland. Thanks so much. Aya, go ahead.
Hi everyone, Aya Shamlis. I'm the head of partnership at Open Startup, and we are an African acceleration platform that supports pre-seed and seed stage startups from across Africa, and we focus on the deep tech science-based ventures. Nice to meet you all.
Hey everyone, my name is Joachim Ewechu. I'm the CEO at SHONA. We're an SME development organization that supports entrepreneurs to build highly competitive businesses in East Africa.
Perfect. Thanks for taking it so short. So we can start. You have seen we have a packed agenda for today. The idea would be that we start with a short reminder of what the pilot was about. Then we'll have a few minutes on the end result of this pilot. And then most of the session would be really on sharing our learnings and sharing also the next step, because as we were saying, that is a pilot, and for a pilot you always need next phases. So we'll share a bit some input on that, and then the rest of the session will be really to take your questions and be challenged, as Julia was saying. So with that, maybe we go to the next slide, please. So the goal of the pilot. So as Julia was saying, the pilot per se started, so the project started 2 years ago because we had a pre-design phase, but the pilot started 12 months ago. So it started back in March until March this year. And the idea of the pilot was really to test if an RBF, so results-based finance, could accelerate the transition of accelerators. So what we did is that we screened different ESO, and then we selected SHONA and OST, so two ESO which had already some traction and were in their stages of development where they really want to transition and make progress to the next phases. And the way the RBF was designed was using a framework that you are seeing here along two kind of dimensions, the DGGF and the ESO were willing to push or improve on. So the first one is the one that you see at the top, so program quality and how to move to what we call the ESO as a service delivery model to ESO as a product delivery model. And then the second dimension was financial sustainability. So how can we make sure that we help ESO, which are maybe mostly reliant on donor funding, to transition to have more partnership, better control of their costs, etc. So that was the framework that we used, and then the whole RBF was designed along those two dimensions. So the size of the RBF per ESO was 250,000 per ESO, as I was saying, and then the length of the RBF was 12 months. So here, maybe on SHONA, more details before we move to the results. So first, you have seen that SHONA and OST, there are different stages when you looked at the slide that we had before. And the idea when we showed these two ESO was really to show that RBF could serve different type of ESO, and it's what we wanted to prove. So I started with SHONA, and then Camille, you can speak about OST. So with the results-based payment, we look at these two dimensions, as I was saying. So one was focused on program quality, and for the program quality, we focused on one flagship program of SHONA, which is called the NESHA program. And on the financial sustainability, we look at SHONA as an organization. And then what where the target of the RBF was that SHONA, what makes it special is that they have an acceleration program with a fund attached to it. And we wanted to show or help SHONA to improve the part of the program and also measure how the acceleration program could convert more into the fund. So increase the number of companies going through the accelerator, which are receiving funding from the fund. So that was the focus on the program quality. And then on financial sustainability, we were looking at improving the cost-income ratio at program level, because SHONA wanted, before looking at diversifying revenue, they wanted to have their costs better under control and have a negative cost-income ratio. And the last part was to move them more towards this product model, so trying to have their flagship program really sold as product instead of them replying to donor tenders, etc. So those were really the focus for the RBF with SHONA. And maybe over to you for OST, Camille, before we dive into the results.
Yeah, thanks, Morgan. Thanks a lot. So yeah, Open Startup International, a Tunisian-based accelerator ESO. With a similar focus, if we look quickly to the kind of the challenges they were running into on the left-hand side. So yeah, still struggling a bit when it comes to being quite dependent on grants, right? Which created a lot of kind of short-termism and also focused a lot of resources in constantly applying to grants and being able to create these partnerships to kind of sustain, which is more on the financial sustainability component, but like a big willingness to kind of try and move away from that and trying to find ways of how to kind of diversify their offering in trying to do that. And on the other hand, focusing on several programs that they're offering, and we here focus on BRAIN program, a deep tech kind of accelerator immersion program, focusing on bringing a lot of kind of deep tech ideas to the market and also connecting entrepreneurs to a large variety of partners, both technical partners, but also potential investors and clients, etc. throughout that program, which had been running for a couple of iterations, and also trying to find ways of how to make that the most effective and enhance the quality of the program. So similar to SHONA, we focused on these two components. On the one hand, the program quality, trying, like, because the program was running for a couple of iterations, they had kind of an idea of things that worked and things that worked less well. where we wanted to focus on is kind of deepening the immersion of the entrepreneurs participating in the program and trying for them to get the most value out of that. You'll see in the next slide kind of how we did that, but yeah, this was more focused on kind of fine-tuning the program, and it's a big flagship program that they were running. So a lot was focused on trying to find ways of not only having entrepreneurs running through the program being satisfied with it, but some tangible results coming out of that, and also tracking that systematically so that they could in the future also see things like that worked well manifesting in the real world after the program would have ended. And on the other hand, for the financial sustainability component, as I said, like OST really had a crossroads of trying to figure out ways of how to diversify kind of their offering, because they wanted to move away from a lot of dependency on grants, but trying to find kind of the space and the ability to experiment with different types of doing so. And the RBF was really focused on providing that flexibility in that space, while OST already had, as I said, the willingness, but also a lot of different ideas that they wanted to test out, and that they could. Again, you'll see some ways of how we did that in the RBF, and AI can also tell a bit more about that later on. But yeah, those were kind of the key goals that we wanted to reach. The results, over to you, Morgan.
Yes, the exciting part of the presentation. So we are super happy with the results. We start with SHONA, and then OST will follow. So as you can see, we had these two major dimensions, so program quality and financial sustainability. You can see on the left-hand side that for each of these dimensions, we had two metrics. And then we had a target for which the company would get the maximum amount, and you can see in orange the results. So as you can see on program quality, almost everything was met. There was this part on technical assistance implementation, and then the transition, as I was saying, from the acceleration to the fund. So that's the only target which was not fully reached. To be honest, when we put it in, we knew it was super ambitious. So we are already happy to see that we achieve this target, but we are at 33% of the full amount. And then on financial sustainability, we had the program true cost income ratio, as we were naming it for this exercise, and then the number of strategic partnership which were signed. So as you can see from the 250,000, which was the full budget of the RBF, there was one part prepaid, and then midterm results, we had a payment based on the achievement, and then end-term results. And over the period, the SHONA managed to get 90% of the amount, which is super encouraging. So over to you, maybe, Camille, and then we'll develop a bit more the learnings.
Yeah, thanks so much. So on OST side, I'll quickly run through kind of the KPIs that we chose for the two criteria, the two overarching dimensions we try to incentivize. So for program quality, again, focusing on brain, we try to mostly focus on outcomes tied to the entrepreneurs running through the program, as again, you want to be at as far as possible as going towards results manifesting in the real world. And we thought this would be a great indicator that could be showcased. So the percentage of startups that were part of that program and how many could sign a partnership of value, which could be any type of value, not only an investor or client, but also maybe a technical partnership, something that could bring them forward. And the second indicator was more focusing on trying to still have OST's focus on all the participants and not only trying to cherry pick and select those that could be more successful. So it's also a bit of an indicator to still maintain quality of the program as a whole, which is the satisfaction score, which they were already measuring. For the financial sustainability aspect, again, because so the first indicator focused more on partnerships, and these were partnerships beyond the traditional grant partnerships. But the most interesting indicator, which I think is the second one, was really, again, trying to provide them floor to experiment with different ways of how they could diversify away from grants only, because this was also what they kind of wanted, without dictating which kind of activities they should pursue, right? Allowing them the freedom to really choose and select how they wanted to do that. And how we would look at this is that the revenue coming from these activities that they wanted to experiment with covered a substantial part of the operational cost. And yeah, very successful. As the BRAIN program was running in the beginning of the year, these were already met quite soon after the program ended. But especially the financial sustainability indicators, also in the climate of the international development space, which was quite challenging, were met. So that was great, and even overperforming for the KPIs that we set for the max payments. That's it. Maybe we quickly, if there are some questions, allow like a minute or so. Otherwise, Morgan, give it, hand it over to you. I don't know if there's any questions. Please let us know.
Maybe we park the questions for the end, like that we give you the full overview. Good, so let's go to the learning. So here we will open it to OST, SHONA, and also DGGF to share a bit their experience. And the way we have structured the learning is along 4 dimensions. So first we'll look at the RBF metrics, then at the timeline and the funding fit, as we call it. We'll then look at operational changes and sustainability of what has been achieved through the RBF, and then both the enabler and bottleneck of such mechanism. So let's start maybe with the RBF metrics. I will just read the top questions and then I will hand over to Shona to take us off. So on the metric, I think it's also one of the key questions that we get when we started the learning session in this format. So were the metric the right one, and how could they be refined? And then can indicator be standardized to strengthen program quality and financial sustainability? So maybe, Joachim, you can start on Shona's side and then hand over to the rest.
Yes, and I think we're grateful to have participated in this pilot, which has been quite beneficial to us. It came at a time, where some of these were some of the strategic priorities that we had as an organization. So the timing was right. I think then the conversation with the iGravity team, which enabled us to then tailor the metrics to our organization and how we're designed, and try to identify the right targets to use. So that helped us come up with these metrics that we thought were actually perfect for us, which also focused on highlighting the areas that we thought were some of the weak areas that we wanted to focus on improving with program quality and financial sustainability. So I think that's very important. I would highly recommend that on the tailoring side and alignment with the strategic priorities of the organization. We struggled with verification of the program true cost income ratio. I think we went back and forth a bit because of the structure, because we had to adapt our own structure and thinking to be able to kind of track this metric, which was different from how we were budgeting before, but also how our audits were done. But we figured out a way in the end. So just mention that the verification also, maybe planning for that ahead of time. We tried, but yeah, we saw some areas later.
Thanks, Joachim. Do you want to go next, Iya?
Yes. So for us, for the metrics, generally speaking, they were adapted and very relevant for our context. Just maybe on the program side, the most important metric for us was the partnership that were signed by our startups. We had also the opportunity to define what is a value partnership for our startup, understand, is it a client, is it an investor? This is the first thing. And then to check it more diligently, because before we relied on our startups just declaring, and through this mechanism, we did really become more diligent in looking for like justifications, looking at clients, really having a more diligent and accurate way of collecting data. So for us, this was important, and also being able to to measure the quality of the bootcamp, which was the key milestone of the program, was also important. On the financial sustainability, it was really a way for us to lay the foundation to better measure beyond the activity and the programs how we sustain the organization. And this also helped us, for example, introduce new KPIs, for example, the leads that we generate, the return on investments from the leads, and really measure the investment that we put into sustaining the organization, fundraising, how it is working, what to improve, and this for us is extremely important. The only thing in terms of maybe area of improvement, because we had only 12 months, it's difficult to measure other indicators that are super important for us, especially when monitoring the portfolio of the startup, especially, how much startups are raising, the survival rate. And for this, we needed maybe an 18-month to 2 years timeline. So this may be something that might be for a next result-based financing framework. That's it on my end.
Thanks, Aya. On DGGF side?
Sorry. So I'll start because it was more like I was involved very much in the beginning, and then Tate was followed closely. The pilots can do. I think that when we with DGGF supporting ESOs, it was always the idea of helping any ESO strengthen program quality and financial sustainability. And we looked at those, but I think that with the RBF, having these very specific metrics that we define in detail with the ESOs really enabled us to really see the change we wanted to see in an ESO in a much shorter amount of time than what we were used to. And I think that's your better place to speak with the others.
Yeah, and I would just add that making sure that we think through in that co-creation phase about how metrics are still reach targets but are attainable is quite important, because otherwise the incentivization is a bit off, and also making sure that there's enough of a buffer to ensure the operations are still sustainable with metrics that are still sort of pushing the organization, and also to think through, as we hopefully continue to do more pilots with other funders and organizations as well, broadening what the metrics could look like, so that we're not necessarily pushing things that could be negative incentives for partnerships. Does that mean that there's continuous focus on donor funding, or what kind of partnerships can we realign what that actually means to be more tailored to specific organizations in a way that matters to them and will mean that they in their own sort of niche area are more sustainable.
Thanks, Tate. So Camille, we can move maybe to the next one. Yeah, perfect. So the next one is on the timeline and the funding fit. So what the 12 months timeline appropriates for what you were measuring, and what the funding structure, so the advance payment and then the part tied on result, the right fit. Maybe we do the same flow, Shona?
Yeah, and this is closely related to the metrics you select. And I remember even during the design phase, there was a lot of back and forth between us around, is this the right metric? Is it achievable? Is it ambitious enough in the timeline? Because that was the context we're looking at it. And in the end, for us, 12 months was quite interesting. So, I think we selected just the right number of metrics to focus on, which was good. So we were able to focus on a few things, and then which pushed us to be able to kind of prioritize trying to get ahead with these metrics as quickly as possible in a very short period of time. So there are a lot of transformations that then happened, even culture-wise internally as a team, because of the time pressure. Of course, there was one metric there that, I think went back and forth initially as well, was the number of investments, which was based on number of successful investments. And while we pushed hard, we later realized that, I think we even saw it's just taking longer for these companies that we're working with to be ready for investment, not just, ticking the box that they're investment ready, but also mentally themselves being ready to kind of raise a loan, which was slightly out of our control. And so, on the timeline side, that's one of the areas where we fell short. But it also pushed us enough to be able to kind of try everything we could with that metric. On the amount side, I think it was also just the right amount to incentivize us to participate. So I think the 250K was quite a good amount. And then I think what I quite liked was the upfront payment, which enabled us to invest in, a few things. We added a few staff members to kind of help us with the implementation of the RBF, and also to help us accelerate some of the things we wanted to put in place. We invested in some processes and tools as well, which were very helpful to do upfront to help us get closer to implementing, to help us to implement this. And some of these elements, so for example, we invested in a fast impact on learning manager, which is usually not covered sometimes with some of the other restricted budgets that we have. And so this investment was helpful for us. And then kind of tied to it was also it was a payment that was based on results that actually then was helpful because it felt like a profit. Some of the costs were, some of the costs of delivering some of these results were covered through other budgets. And so having the success, especially the investment one, having that payment at the end, for us was a bit like a profit, which was also a good incentive for us to try and push to get those numbers as high as we could.
Thanks, Yaya.
I think it's quite similar to us. I think for us, the timeline worked for two reasons. The first one is that we are a fast-paced organization, so we usually move fast, and we were already undergoing a sustainability strategy. We just didn't know how and how to do it structurally. And the other thing is that we had a safety net in terms of budget. We had already financing for the team, so we had already the team recruited, and we started already preparing the edition of Brain. So that's why the timeline for this pilot was very appropriate. But just to measure maybe other KPIs, if we had, for example, a KPI around investment conversion, we might have needed a bit more of time, because usually after the program, we need at least 6 months to measure if our support was able to help startups get access to investment, and it usually takes a lot of time. The fact that we had an advance was very also interesting and important for us, and really having the liquidity needed to run things. I think that's it. Also, the fact that the KPIs were co-built together with iGravity and DGGF and were realistic for us. We spent a lot of time making sure that we are able to deliver on the KPIs in the timeline needed. Was also very very important for us to make it happen. But I share Shona's inputs. Very similar situation.
Thanks,
Maybe from a founder perspective, and here I will reflect, because I've been with DGGF for 11 years and been doing ESO support since 2017. In the past, we have been supporting ESOs normally for 4 to 5 years to actually get to that same type of results. And I think that for some ESOs, you do need this time. But I think that if we look at ESOs like SHONA and OST that really had this willingness to get there and to get there also fast, and that they had this safety net, I think that then the 12 months works as a really good incentive. And in retrospect, I mean, we always know that investment readiness takes more time than what we think. So maybe for anything related to investment readiness, maybe we should think that 12 months is just a little bit short and 18 months can work better. It's still out for debate. We still need to do that. I think also what was very important for us is we are there to be really a catalytic investor or funder. And I think that, showing how additional we can be, right? They have their programs funded, but then we can come in there with a limited amount of money, a limited amount of time, but to bring them to to help make this transition to the next level is very much in line with our mandate. And I think also for us, what is very important is the funding we deploy is actually public funding. And I think for me, it felt the most responsible funding we have deployed so far, and without kind of putting the ESO at risk. But I must say that also DGF is quite unique, right? I mean, it's a form of fund with these facilities through which we can support ESOs. We have a very long time frame. We have actually 15 years, and the funding we have, we deploy through investments or different types of grants. So for us, actually, if some budget is not spent, we can very quickly reallocate it to something else. We actually have much more pipeline than we can deploy. But I understand for some other funders of ESOs that have very, like limits in terms of the timing that they can deploy funding, maybe that can create challenges. But for us, it was actually even better suited.
Thank you, Julia. So over to the next learning, which was on operational changes and sustainability. So did we implement new or long-lasting operational changes with the RBF that the ESO will keep, and how the RBF move the ESO toward financial sustainability? So maybe Joachim?
Yes. So I think one of the things, because we're tracking the number of successful investments, and so then that meant that we had to look at the process of getting there, and was split between an accelerator that we implement and then a fund that our subsidiary, SHONA Capital, that's an SME investment firm, implements. And so then kind of this pushed us a bit to then align our processes to see how we could be efficient and, shorten this period within the 12 months. So this is generally for us improve that collaboration and, making sure we're looking at the same things. So that in addition to having the Chinese wall, we're still kind of producing the right type of pipeline for the fund to be looking at for investment. And that was helpful. And for the operational changes, I loved said the kind of the RBF beyond the money, because there was the money and then there was the kind of ongoing reflection conversations. And because there was this result of unlocking money, it kind of created that space, capacity, and focus on improving a few things that you usually would not have the chance to focus on because you're running to implement the general program for a partner. But because anyway, we had a program to implement operations in this case with the RBF, it helped us then focus in on things like technical assistance, tracking that and seeing the effectiveness of that, which also helped us develop additional learnings and metrics that for us we're embedding, and now we're using that across everything we're doing, all our initiatives and tracking that. The tracking kind of the time that people were spending, which was key for us to looking at the program cost income ratio and just making sure that we know how much time everyone is spending on the program, so that we're able to kind of also have active conversations with partners about that time, even the roles that they don't think are necessary. So that's also, the time sheeting is something we're keeping, the time tracking and continuous analysis of that. And then, of course, on the sustainability side, I think this conversation also helped us start to think about our programs that were designed for partners, inspired us to think about transforming them into products that we could package and go sell to other partners. And that's where one of the strategic partnerships came from. And, the partners we're working with were also very excited to see that. We focused on our Nature Acceleration Fund, which is focused on supporting the growth of agroecological enterprises. And then we focused on our women's entrepreneurship work as well. And when we talked to our partners about that, they were also very open to seeing how we could grow kind of these programs as products, and kind of were fully behind that as well. And so that I think we're going to continue. First, it gave us the idea of continuing to grow those and then thinking about everything else we do shifting away from bespoke programs all the time towards kind of these standardized products that are easier to sell. Yeah.
Similar to for us, for us, I mean, I think the framework allowed us not only to do operational changes, but really a lot of strategic changes to revamp a bit the way we operate. On the KPI side, on the impact measurement side, we used to measure a lot the activity, like the startups that graduate, the number of trainings, and we moved really to more startup-driven way of managing our performance and impact, really looking at the portfolio, the performance of the portfolio, and we really built on the small KPIs that we co-created together in this project to add others and to really at the end of the day say this is our portfolio performance and this is our contribution to the portfolio performance, which also attracted a lot of donors and allowed us to be much more convincing towards donors and investors. In terms of revenue diversification, we used to be at 100%, 90% grant revenue based on grants, and this year we have 40% of the revenue that are based on consulting engagement, on milestone-based engagement that are much more flexible than the grants. We've been able to really introduce ways to generate short-term revenue and long-term revenue. So we used to be just an acceleration program. Now we take sweat equity from the startups. We introduced a small investment arm, and we've been building corporate partnerships, and we support corporate, for example, CVCs that want to invest in startups, and they pay for our acceleration platform, which really is for us key for survival and sustainability in this competitive and tough environment. We've also, it created also for us a space to really think about how to do less but better. And we moved from doing sector agnostic, doing everything, and many startups, to reducing the number of startups, but doing more sector specific support, focusing on areas where we have majority of startups in our portfolio are in these sectors, and also where we believe we have an added value. And now we're focusing more on deep tech, health and climate, and this is where we are really building partnerships. And then I think that's it. That's already a lot in just 1 year. So really a lot of strategical changes happening. Over to you, Julia.
Thanks. So yeah, just thank you, Camille, for answering the question, and it is similarly tied. Yeah, about 70% of the funding was tied to the results. About 60% if you also include the TA grant that was part of this. And TA, as mentioned, is a really important part of helping to make those priority areas for SHONA and OST part of the package of the RBF portfolio, and allowing the metrics to be developed properly and measured properly as well over the course of the program and into the future as well. And so that is part of that sustainability pathway, is having metrics and measurable outcomes that can be taken and used into the future. So that was a really key aspect, that TA part of the impact and performance measurement. And then also importantly is that, yeah, we use, because of this being a 1-year pilot, but also RBF sort of in general, thinking not as a particularly new shift in overall revenue model for ESOs, but as a way to think through how can you layer this on top of other models to drive that sort of change to more sustainability. So that's how we've thought about RBF so far, but would be keen to know from others on the call as well. If you think that RBF is more of a standard revenue model, or if you sort of agree with how we've at least piloted it so far as a sort of short-term way to help transition organizations to a more sustainable model by providing that tailored support and operational funding.
Thanks, Date. So the last category of learnings is around the enabler and bottlenecks. So what were the top enablers that made the RBF work, and on the opposite, what were the main complexity or bottlenecks that we have seen? So over to you, Joachim.
Yeah, and some of these I've referenced already, but I think the things that helped was the alignment from the beginning in the the goals, the metrics, and also then going back and forth. What I really liked in those conversations was not just taking what we said and said, okay, we'll do this. It was, that's very helpful in thinking about the design and interrogating those, and also thinking about the process itself to get there. So that was quite helpful, which helped us arrive at the right metrics within the timeline that we had. And then I talked a bit about beyond the money, the reflection conversations that we had on a monthly basis with the iGravity team, which helped kind of, the questions around, okay, which are the companies that are going to, that you think could meet this target? What are you doing with them? How can TA help? Which helped us reflect a lot of around the different parts of our work, and also improve those, our processes there. So that was also key, I think. That was key, I believe, not I think. Of course, we were not designed for, I think we were not designed for such a structure. So for us, we had to kind of shift a bit of our own internal thinking in terms of budgeting and forecasting, which was a bit of a shift. But then I think is inspiring also. Then we're doing the project-based budgeting already, but it's getting us to be more refined there, especially on the staffing costs that sometimes are direct, sometimes are hard to justify, and this is helping us think about those a bit better as well. That's where some of the verification issues also came from.
So for us, the enablers, first one was really the co-creation process, the kickoff and co-creation with iGravity and DGGF, really co-building together the indicators and understanding really the framework before running it. And this was very interesting. The second thing is for us, the fact that we were somehow ready, and the fact that we have had a safety net, as I mentioned. We had already a funding from KfW allowing us to absorb the risk and to really maintain the core, finance the core of the program, so really reduce the uncertainty. And also having somehow an M&E framework, even if it's not sophisticated. I think the ability to really be somehow confident to be able to collect data and know how to do it, reduced for us at least the uncertainty of not achieving the KPIs. And then the other thing beyond the financial part, really having the reference of DGGF was very important for us to unlock other donors and partners. So this was very important to us and built a lot of credibility. In terms of maybe bottleneck, I don't think all ESOs are suitable for this, or maybe just this specific framework. ESOs that don't have strong financial resilience, don't have M&E, basic M&E might suffer and it might be operationally risky. So it's a question that we've been also discussing with Julia, Camille, and the team. But just maybe to add, the underlying principle of building result-based financing is important for any ESOs, regardless of the maturity, because what we're seeing is a lot of ESOs are optimized for donor activity metrics, like caring about the number of training and caring about the graduates, and they end up losing the really startup-driven mindset, which is very important, and many startups are a bit fed up of this system. So really building a mindset where ESOs move from just caring just about the donor to caring about the final beneficiaries is extremely important. Yeah. Over to you, Julia.
Thanks. So from the DGGF side, again, as was mentioned, co-creation really important. There were a lot of brains in the room. I wasn't one of them, but many that were part of the process. And so that was really critical to make sure that they were well calibrated. Having senior leadership, CEO involvement really gave it strategic weight. And then throughout the process, having that involvement and was really clear in the monthly meetings that we had from the CEO, as well as other parts of the organizations were represented, and could really tell that they were priority areas and were really strategically significant to different actors within the organizations in the way that they were able to explain how they were working on the different metrics and how it was being implemented was really very evident throughout the process. From a DGGF perspective, given that these pilots were run through us, we had the RBF fit within our existing procedures, but hopefully it is not so difficult for other funders to potentially adapt as well. And we're happy to share how we were able to do that or think through how that might be possible for others. One key aspect for us was having a fantastic partner in iGravity to help us along the way, because there is significantly more process involved in the development of the metrics. As we mentioned, they're incredibly important, and the TA that goes along throughout the process prior to setting up the RBF pilot and then throughout. And then the measurement of the results and the sort of audit there is really critical to make sure that we're really tracking the right things. And so that was absolutely critical for us. And I would say that just one thing to add on sort of all of these things wrapped together on sort of timeline and metrics and outcomes, finding the metrics that are associated with future outcomes, because in 12 months you might not be able to see outcomes, but finding things that have outputs that are the building blocks. So for instance, partnerships of value, as I mentioned with OST, being able to be focused on what does a startup actually need. Those partnerships are critical. And so whilst that doesn't necessarily, we can't see that they have been given more investment, those partnerships are really a building block towards that, and that's the thing that we can measure within 12 months. So thinking through what are those potential things that we can point to as those sort of outcomes that will then become sort of broader impacts in the future.
Thanks, Tate. So maybe just to conclude before we open for Q&A in the next step. So it's a lot of information, so let me try to summarize, but maybe on the metric, which was one of the key learning, I think what was helpful is to have this standard dimension with program quality and financial sustainability, because we had the co-creation, but with guidances in terms of some flexibility within it. And also building on what were the ESO already tracking, because you need this M&E in place and you can build on that, but that was key. On the timeline and funding fit, so the 12 months, as also Eya was mentioning, it doesn't work for any ESO. So really when we selected, we also used this pilot and 12 months as one of the kind of self-guard to select those ESO. So we looked at ESO which were ready and wanted to do this strategic shift. And was really focusing on key intervention that needed to change. As you have seen, some metrics work a bit less for the 12 months. So the conversion to investment, even for an actor like SHONA who had a fund attached, is too ambitious. So that might be something that we would not do in the next part. And the advance payment, it's really key, even for actors which have a certain flexibility. You need that if you want actors to focus on these changes to give this safety net. Then on operational changes and sustainability, as you have seen, what has been done through the ESO RBF there are processes which are now used and hopefully will be still used in few months. But we don't want to pretend that the RBF was the cause for doing that. I think the ESO were already starting and wanted to do that, and the RBF was more giving them the time and the money or capital so that they can do that in the 12 months. So it was really acting as a catalyst. And then on the enablers and bottlenecks, so here again, the RBF in this specific context, so the amount that we were giving, the 12 months and the ambitions of the target along the 2 dimensions, as Eya was saying, it's not for a super early stage nascent ESO who doesn't know exactly where they want to go. I think if it would be done for other ESO, either the framing or with more advanced payment and maybe less ambitious metric, that could be done. In our case, we really chose also SHONA and OST because we had this constraint and thing that we wanted to showcase in 12 months. So I think that was really key as a key enabler, that we really choose the ESO properly. And then what was mentioned as well for RBF organizations which are not used to that, and to have maybe an intermediary between the ESO and the funder, like an organization like us, but other that are doing similar things, is also helping to make sure that it's well designed and ambitious enough, but still achievable. Yes, I don't know if it's Julia or Tech, but please go ahead and compliment.
No, but in line with this, and also the question whether, whether we are, would you say that those ESOs that's feasible for RBF are those who need it the most? I don't know if they need RBF the most. I think, and I don't think that RBF is the solution to fund every single ESO. I'll be honest, we did a lot of milestone-based funding, like grant funding to ESOs that again were a very long time, 4 to 5 years. Honestly, this is what they needed, because they needed the time to try different things, to establish themselves further. And there's not, I think it was well suited for them. So I think again, what we say about like this RBF, it's not about needing the funding, but more like the type of funding. And I think in this case, SHONA and OST, they needed the most an RBF instead of any type of funding, because they had the strategic drive to ensure the quality of their programs and reach more financial sustainability, also in a more limited amount of time. That's where the fit was. But I think that you can do RBF a little bit differently, or that you don't have to do only RBF with ESOs.
Thanks, Julia. Camille, should we go quickly through the next step and then we open for questions?
Yeah, I'll be very quick. Thanks, Morgan, and thanks, everybody. I'll be very quick. So we have a couple of things going on that kind of came out of the pilot. First of all, on the left-hand side, as Julia mentioned, we'll share this, condense all the learnings in a report, more, I would say, like a learning guide, a learning document where we outline some of kind of the key things we learned throughout the way. Also, and if you want to develop this in the future, that will be published in the upcoming weeks, month. Secondly, we will have a seminar in Nairobi from the 16th to the 18th of June. I'm not 100% sure if it's completely set which date that will be. Let me know if you already know that, Morgan or Julia. 17th, there you go. But yeah, it would be great if some of you are already attending to meet there. I'm not sure if it will be online accessible, but yeah, just that so that it's on your agenda. It would be great to meet around that time if you're in Nairobi. And thirdly, yeah, we have a couple of ongoing initiatives around the pilot itself. We're building a coalition of different partners, from funders to technical partners to more funders and any kind of actor that's interested in it, whereby we're trying to find ways, kind of condense the learnings, and also see if there's ways of how we can increase the number of pilots that we do from implementing some of the learnings and trying to build out kind of the RBF for ESO agenda, making it on the one hand more effective, how we can share learnings with each other from the initiatives we're doing, and also cooperating together on that. So just a note that if you're interested in any of these things, like feel free to reach out to the DGGF team or us at iGravity, and we'll be happy to connect, or the ESOs, or Joachim and Ea, feel free to reach out to them. And then, yeah, sorry, we kept a couple of minutes. Go ahead and ask your questions. We'll be here to answer them. And if you have maybe a couple more minutes, I'm free to stay for a bit longer to answer them. Thanks so much. Let me know if there's questions.
Chiara, good.
Hi. Quick question. Thanks a lot. Very insightful. I would have some questions. I'm trying to understand from the TA elements that were provided to the ESOs, what were the most effective in order to help them to improve their business model and the revenue model? What worked? So what was done in order to improve that side? Would be very interesting to understand.
So I can start, and maybe after Joachim and Ea, you can complement. So maybe first redefining a bit technical assistance, because I think the way you understand it, Pierre-Alain, is maybe a bit different the way we define it for it. So for us, the TA, it was really a smaller part of the full amount which was deployed. And it was mainly to have time of the management team allocated to that. So it's more payment of the time to make sure that they are focused and we have this strategic discussion. It was checking in and tracking and, discussion from iGravity together with the team. And then on the SHONA part, I guess it was also the same on your side, OST. We had also part of the TA, which was going to more the impact management tracking and giving them, budget to be able to build things which were needed. So it was less about business model because they had already idea of things that they wanted to do, but I think it might depend on the type of ESO you are targeting. But Ea, Joachim, you complement, or DGF if you have. And otherwise, maybe we go to Sushant.
Thank you so much. Really very interesting, exciting workshop. I learned a lot, and I like your approach. If I summarize it maybe in my own words, what you're trying to do with the ESOs is trying to, on one hand, professionalize them and think more entrepreneurially in a form what we would do with the companies that we want to take it through an acceleration program as well, making them market ready and investment ready in some form. You can always correct me if I'm wrong.
No, exactly. I think, Julia, it's your best sentence which will come out. Go ahead.
Exactly. I mean, hence the 12 months. I actually think that we thought about it in the past of calling it the accelerator of accelerators, but we didn't want to confuse people. But that's exactly it. And I think what we've seen is, listen, it's interesting, right? Because an ESO is there to nurture companies, but then the type of clients they have or partners they have often pushes them to not think as a company themselves, which is totally wrong. And I think that with the RBF, we managed to do that. I really appreciated when Joachim also said, for some of these incentives, it kind of comes as a profit, and I think it's it was the goal.
Just to add, for us, the funny thing is that because we support startup, we always advise them to focus on their users and clients. And we did the exercise of really focusing on the startups, really the beneficiaries, how to make them more scalable and to focus on their performance, while before we didn't really focus 100% on that. Really, I think this was the exercise that and the outcome of this engagement.
Sorry, Shushant, I'm not sure. I think we lost him. I hope I hope you could hear a bit what we said, or if you can reconnect, restate the question, because I think we lost your
headset issue. But it's recorded. Worst case, you can use the chat, Sushant. And in the meantime, if there are other questions, Camille, if you have a reflection, go ahead.
I see Alice. Go ahead.
Good afternoon, everyone. Thank you so much for taking my question and for the great presentation. Very interesting, and congratulations to all, especially to SHONA and OST. I think you worked a lot in the last 12 months, and it was great to hear about your experience and feedback. I have a few questions, actually. One of them is more for my better understanding. How did you actually control the use of the RBF funds? So was the use limited to a pre-approved budget? Was there any monitoring afterwards, or was it done in complete autonomy by the ESO? That would be my first question. My second question would be on the selection process, because, well, I think Argidius is here today. Selection is one of the key success factors for an accelerator, and for an accelerator, of course. So on what basis did you select the partners? And finally, on the collaboration, so there were a few elements of answers in the feedback that I heard from the ESOs, but I would like to know more about how DGGF and iGravity were actually involved with the ESOs in the inception phase, but also then throughout the program. So I would be very interested in that. Thank you so much.
I can start with big answers, and maybe Tate and iGravity team, and actually SHONA and OST, you can complement. So really here, so we had actually a very good idea of the financials of each ESO, from like historical, and also what they were looking at, because that's also how we had to understand how is the RBF going to play. As we said, the RBF was a very small amount compared to their operating cost and the big scheme of things. And so it was really, and because most of it is actually in result-based, so incentivized, actually. There's not really a budget. You're going to spend this amount on this, on this, on this, and that. There's an overall budget, but then the amounts are really linked to actually these results. But we do, because it's public funding, there's actually a whole financial audit that is also happening. The second thing on the selection, yes, scale is very important, and it's the S in it. We actually have our own criteria to select ESOs as DGGF. So I think that we kept these criteria very much. But then when we did the whole design, we actually looked at the readiness of taking an RBF and all of that. And maybe Morgan and Camille, you want to add a couple of specific things we looked at to be able to select them. And the last one on the partnership, we actually had a contract with between DGGF and iGravity that was about like doing the whole research beforehand, engagement of stakeholders, and the design of what you've seen, like the archetypes, plus then the RBF itself, and then all this work now on learning. And then we had a DGGF contract with every single ESO for the RBF we were providing. And we actually had monthly catch-up and then specific, almost quarterly learning lessons where we would all be.
Thanks, Julia. Maybe to add quickly on the selection. So the way we select ESO, it's still, a selection of companies. So we really do similar to any company that you will invest in or fund. We had really look at the business model, the financing, the team was really key, and then understanding really the strategy and where they wanted to grow. Then, because it was a 12-month pilot, we needed to understand a bit where we could help them most. So really having also actors which were having either program which were aligned with the timeline that we wanted. It was a key additional things we look into. And the last one is really on the M&E part. So as you heard a lot, we need to define metrics, targets. So we need a baseline. We need to have clean data. And I think that is not always the case. So we didn't have a good feeling with all the ESO we have been engaged with. And that was one of the prerequisites as well. So. Any other question? We are already over time, so maybe we take one last question. And anyway, we're happy to share a bit how we did it. For the one interested, we can take the question and share more material bilaterally. So please reach out. Any last closing questions? If not, maybe over to you, Julia or Tate.
Yeah, I think on behalf of Tate and myself, DGGF side, we really want to thank our partners. It's been a lot of work, but a lot of fun as well. At least for us, we learned so much, and we're very inspired to do more. And we also want to thank everyone who has, kept us sharp with their questions and challenges across the road. It was really, really nice, and more to come.
Thanks a lot. Have a good rest of the day. Bye-bye.
Bye-bye. Thank you.
Thank you.